Alright guys, give me just a second to update the share. Sorry, I was jamming. You're jamming now, just cut off, I apologize. Let's see, there we go. So I'm going to start with Bitcoin and then switch over to several of these stocks that people are asking about. So let's see, let's make sure everything is good. Looks like the mic is picking up good, everything is good there, so I will dive in. And if there's any specific tickers or cryptos that you want me to take a look at while I'm going through and doing technical analysis of some of these we've been trading, please feel free to throw them into the chat, either on YouTube, Bullish Rate, Ethical Trading, any of the above, and I will try to fit it in as we're going through these. Somebody asked in the lounge over there, I think it might have been Susie. I can check and make sure, but they're asking what was the recent timeline comes to longer contracts such as the one for block that we entered for June 2025 today, suggested to sell today, same day, trying to understand when to hold, hope it grows more versus reason to buy so far out when anticipating selling so soon. So, good question. I'll answer that before we dive into some of the technical aspects. So, you will see me trade different types of contracts, whether they are near term, long term, various strikes. For instance, that one that you're referring to was actually one that's pretty far out of the money right now. That being said, the Greeks on that given contract don't require it to go in the money. And just for clarification as well, I typically will alert something and then I'll do a follow-up alert once it's up X percentage, normally 5% or more, simply so that people can set a stop loss accordingly, just to be safe, because some people are trading a single contract and really those people need to be, if they're trying to really scale, grow, and be careful with their account, they're trying to take profits when profits are there. You don't want to take the risk of something being 25% or more up today and then maybe taking a hit overnight and going negative. So that is all that update recommendation is. I don't tell people when to buy or sell, so that's an important thing to keep in mind, because technically that is not legal. Instead, I share some of the contracts and things that I trade and information so that people can make their own decision based on that, right? So I will say that the more you kind of trade some of those, you'll start to get the hang of it. My normal philosophy and approach, and I think I have several write-ups out there explaining it, is I buy a number of contracts. Once I'm up a certain percentage on it, I will actually sell off a portion of those contracts to cover my full cost basis. And then I can ride the remaining contracts as, quote, runners without fear of taking a loss. But the stock specifically that she's asking about here is Block. And that's a good place to start for technical analysis today. So let's start there instead of Bitcoin. So if you look, this is one I've been watching for a while just because the overall setup on it, I was digging it. I saw some bullish options flows going on with Block. Someone mentioned it earlier today and it reminded me we need to go ahead and enter. I was waiting for confirmation above this neckline of the inverse head and shoulders that you see here on the chart. So you can see the candle for the daily today pushed and closed above that. We have increasing buying volume here, so that's a positive sign as well. The measured move for this inverse head and shoulder setup just happens to be around that 158 price range. So those options are actually a really good example, even though those are safer further out expirations, one being in March, one being in June of next year. Normally, I wouldn't expect contracts that far out to move 20, 50, 100% early on. Normally, they're going to move much slower and safer. That's beneficial for you as well, especially if you're newer and getting used to things, because if it temporarily goes against you, it doesn't hurt nearly as bad as well. Flip side of that is if you're trading shorter term contracts, you typically can see bigger percentage moves on calls or puts. That being said, you also have the Greeks such as Theta that are ramping up and working against you in that position. So those today are a good example of just overall why it's really important to pick certain strikes and expirations with supporting Greeks for the movement across the range. So one of those from today, I believe, is up like 22% at the moment, and one of them's up around 15%. And that's for those block longer time calls. You could probably go with some that were maybe like I don't know, mid-December, they probably have a slightly bigger percentage gain, and the premium was probably cheaper as well. But like I mentioned in the Discord earlier today, I wanted something far enough out that I could give it time to let this formulate and play out a bit more. Because we're just now peaking above this resistance level. You can actually see here historically, we actually peaked above it before and rejected. So what I'm watching for is to see, can we push above that and have bullish continuation to the upside. Aside from the inverse head and shoulders, though, you've got a bit of a bull flag formation going here that looks like we're trying to break out to the upside onto. So this could be considered, I guess, a short-term quick trade if someone wanted to trade it like that. But for me, this is one that I'll be just kind of riding out the position as it is. The nice thing about being up already 20% or so on these longer-term calls is even if we had a slight retracement or pullback tomorrow or Wednesday, we're still probably going to be up and green on the position. So it gives you a lot more comfort to kind of ride it out without the fear of going like negative 50% the day after entry. And they don't always, I'll be very transparent, they don't always work out that way where you immediately are green by that much. Typically, you're sort of waiting on the movement to play out, even if you enter after confirmation of a bullish breakout. So, again, I guess to simplify your question, I normally recommend buying whatever your number is of contracts for the full position and then trimming to cover your cost basis as soon as it makes sense. So that may be that you buy 10 contracts for $1 each of something, and then you sell 7 of those. I'm sorry, let me math this because it's been a long day. Let's say you have 10 contracts for $1 each, and therefore your cost basis for the 10 contracts is $1,000. So if you were to sell, you're up 25% on those contracts, and then here I need a calculator because I'm dependent on it nowadays, which is bad, but I could sell at 20. I just want to make sure my math is right there. At 25% gains on those contracts that are $100 each, you can sell 8 of your 10 contracts, and you now have covered your full cost basis of $1,000, therefore leaving the remaining 2 contracts to ride on as runners without taking the risk of an actual loss on the trade. Sure, you forego the risk, or you forego potential gains of those 2 contracts if you do have it turn against you, but that's where you can set your stop loss at that point, right above the next key resistance or key support level, depending on if you're trading calls or puts. But that approach seems to work really well for me by selling off a portion of my position and riding runners. For one, you miss out on a lot of the FOMO type feeling that comes into play if you sell an entire position for, let's say, 30% gains, and then it goes on to be a 1,000% plus gain huge banger, which we see quite a bit on some of these longer term calls, like those Palantir calls. Oh, awesome, you are listening on. I wasn't sure if you're going to get to listen today or tomorrow, so hopefully that was helpful. And I do have a write-up I can give you as well if anyone's more visual and needs to kind of reference it, so just let me know and I can share that. But glad that was helpful. So I will dive into some more technicals at this point just to kind of go through this stuff. And if there are other learning topics that y'all want me to kind of pump the brakes on and explain, let me know. I'll try to incorporate it within as we're looking through these things, but also I can make it a point to actually continue making separate shorter videos, which I know I owe y'all several right now, so those are on my list. I'm trying to go through those as I can and record those as separate segments. That way you don't have to sit through an hour of technical analysis to get the info you need. So jumping back over real quick before we go full-blown stock mode, I want to look at Bitcoin because I think people are, like I mentioned in the lounge earlier, people are freaking out on crypto and everything else yet again because we have a slight pullback, and then you got those of us that have been in crypto for years that are like, this isn't even really a pullback. It doesn't feel that way. So very much still have a bull flag intact here on Bitcoin. You can see volume is also picking up again. So you get a pullback here to the support level in the range. It would not surprise me even to see a little bit more pullback to maybe this previous support here, or to see us just rip out to the upside here with a breakout above that current resistance range. Keep in mind on those breakouts, what I like to see is a pickup of volume, similar to when we broke out over here, and then on some of the stocks I'll show you as well. But when we broke out of that trend and that resistance level, see how volume picked up as well, which given that was the election that served as a catalyst, still you typically want to see an increase in buying volume to push through that supply zone, which is where people are selling. So be watching for that on Bitcoin here. Measured moves still the same as what we've talked about the previous weeks. Jumping over to Apple, because people were asking about that earlier today. Let me show you what we got on Apple. Ooh, I didn't see it during the day because I was looking at other stocks. I think it was Analyzer that was asking about entry on this. And yeah, I probably would have entered some more puts had I seen that rejection earlier. So he asked if it was a good time to enter puts on Apple earlier today. And he was asking as we were approaching this downtrend line that you see here. And you can actually see that we indeed did hit that downtrend line as well as that minor resistance level that's right above it, and we rejected off that level. And you can see that it wicked above that downtrend line. And yeah, Analyzer's listening too. I see him over here typing on Discord. So that's cool. You did buy one? Yeah, Analyzer bought an Apple put. I'm still in some of the runners from the previous position that we were trading. I don't know how much they're up right now. I probably need to look, but I'm glad you got in on that. You got a good entry too. I'll be watching that to see if we get a additional attempt at a breakout here, because it might try to break out to the upside. That being said, that bull or that bear flag is still very much intact there, even though we've got this slight rising wedge going on. So keep an eye on that, especially if we reject hard off that range tomorrow into Wednesday. We'll see what happens. Yeah, overall the levels on Apple, we're in this range where we know many of the historical levels of resistance as well as support. So keep an eye on this both ways. I personally wouldn't trade calls to the upside on Apple here until you've got confirmation of a breakout above that downtrend line. And just like I mentioned with the bullish breakout, you made money off the same contract 4 times now. That's sweet, dude. See, in and out, awesome. But well, I was gonna say, it's just like the other aspect of the breakout on Bitcoin or anything else. If you're seeing a breakout of a trend or a bullish breakout to the upside on something, ideally you want to see an increase in volume come with that, so that it can really support that move to the upside as a breakout. But me personally, there's more bearish risk here on Apple than there is upside, so I'll be watching this cautiously. Like I said, I'm still in just some of the runners on those Apple swing puts here, because I already covered my cost basis, so I'll look for a re-entry when it really makes sense for me. But going from Apple over to NVDA, just because people are asking a lot about NVDA because they have earnings this week. I know some people are tuning in specifically for that. I will tell you, just like I tell people every earnings for stocks like NVIDIA, Tesla, and many others, be careful, especially if you're trying to trade options and their near-term options, because they're expensive to go any further. Just be careful. Typically, with earnings, people get burned on both sides. So the situation like Tesla getting that huge breakout last time, and NVIDIA like several earnings ago getting a big breakout, that's quite rare. That shouldn't be assumed as the standard. I'll tell you that I could go pull the data probably, but 9 times out of 10, people that chase calls into earnings end up getting wrecked. Because I used to trade options either way for earnings, and most of the time now, I just find it better to wait out earnings or trade them indirectly via sympathy tickers. And for those that don't know what I mean, you can trade NVIDIA indirectly for earnings by trading other semiconductor stocks such as AMD or MU, or I've got a whole list here that I trade. Wow, Monolithic Power is down to 587 already. Jeez. SMH is a good ETF that you can trade for sympathy exposure. SMCI, we won't even talk about that crap right now because I see it's ripping in after hours, but like, I'm just gonna say be careful with it. Intel would be another good one for exposure, or even QQQ, but you have to be careful with QQQ just because if there's other tech earnings that are going on, the premiums are typically spiked and jacked on those as well. So, NVIDIA, what am I watching for here? NVIDIA, we have got a break of this uptrend, which is pretty significant. Like I said, be careful with anything from a technical standpoint here, because while technicals really do work and they matter, at the end of the day, news or significant data releases can have a more significant impact and throw technicals out the window. So the technicals come to play for referencing where you might see a reversal of a move following something like earnings. But that being said, we could see anything here for earnings. The upside measured move of this existing breakout setup. It's still in that 175 range, and in no way am I saying that for earnings we're going there, right? Because I'm just not going to tell y'all that that's not the right way to trade. Downside risk here with earnings on NVDA would be minimally a test of this current trend line that you see here. Likely at this confluence around that 125 level. If that level breaks, we're looking at a back test of this trend line that we broke out of previously. So anywhere along that level, probably that gap that got left at 119.38 would be where we go. I haven't looked today to see what the implied move is on NVIDIA options for earnings, but I imagine it's pretty significant. Thus why people get burned on both sides due to IV crush, because if it moves within that implied movement range, both sides get wrecked. Is basically how that works if you're not used to trading options with earnings. So again, be careful. I know that the news came out over the weekend with the overheating of the Blackwell chips and the server racks and all that good stuff, which people are going to say that's timely that that information got released right before earnings, but welcome to the stock market. That's how this kind of works. So next stock we'll look at, going down through the list here, as well as some of the ones that we have been entering or some fresh trades. Let's look at Rivian real quick. So we scalped some Rivian calls, some short-dated ones earlier today for some nice gains. Good example of kind of what I was talking about earlier with nearer-term contracts moving more. I wasn't expecting a huge breakout move immediately because I'm in longer-term swings for that reason. For the trade today, I was looking for a short-term move, so I traded actually weekly calls at the 1050 strike, and they gave 60% gains. So it got that nice little bounce. It's interesting to see this is holding that support at that range. No, I haven't done Tesla yet, Analyzer. I'll look at it here in a second for you. Today with Tesla was yet another one of those situations, and I'll talk through it here in a moment, where retail got trapped for the most part based off what I saw in the options flows. But yeah, Rivian, we got the breakout of the downtrend. We rejected at that resistance level following earnings. We'll see what happens here if we hold the support and consolidate in this range and continue upside momentum after this back test again. It does look like volume's trying to increase again, so we'll see what happens here. EV overall is going to be hit or miss. I think people are still trying to figure out where Trump lands on EV aspects. Obviously, he's a supporter and fan of Tesla, regardless of how you feel about the $7,500 tax credit. A lot of models were beyond the price point of that tax credit anyways, so that's not really a big consideration in my mind. Plus, it's kind of silly to think Elon and Trump hadn't already talked about that before it happened, well ahead of time. I'm sure they talked about that kind of thing months ago. So, alright, had a sip of drink, and now I will look at Tesla real quick for you. So, I haven't looked at Tesla today. Damn, I should have sold more covered calls today. I was sidetracked looking at other tickers, and I didn't. We'll see what happens tomorrow. That was a short-term setup. There's all kinds of lines on this. I'm sorry that it's so messy. We've been scalping puts and calls, so there's tons of minor support and resistance levels here. I'm going to go through and clear some of those out to make the zone not so muddy for you. But I'll go back and clear out some of those historicals there too. Really on larger time frame though, you can also see that we rejected yet again at this 342.72 resistance level. If you look here on the 4 hour, it's probably a bit more clear, yeah. Or even more so on the daily, I bet. Yep. So you can see we pushed above it here, but then we failed to have a follow-through candle on the daily, which honestly Tesla needed some pullback after that massive upside movement it's had since October with earnings. That being said, I don't like, from a bullish standpoint, as much as I want Tesla to go moonbound, because I now have 1,001. Yes, I do have one more than 1,000 shares. Don't ask. It's kind of an inside funny amongst the Discord, but I have a lot of shares, so I'd love to see Tesla rip to the moon. But I don't love the fact that it left these big gaps on the daily. That it's probably going to start filling some of those gaps at some point in the near future. So I'm minimally, in the meantime, looking for a back test trying to move this, of this trend here. Just because Tesla's got a lot going on there. I don't recall why I drew that line, but I'm going to mark that off just so it's out of the way. We've got yet another gap, actually, as I look at this now, because the gap up over the weekend with some of that news that came out. So Tesla gapped up again and left another gap. Some of y'all have been asking recently about gaps. I did like a nice little write-up on gaps, but do gaps always get filled? No. But there is a 70 to 80% chance of a gap being filled based off of a larger time frame, such as the daily candles. So I'll be watching cautiously here, especially since Tesla gapped up and just happened to magically reject at that same key resistance level. The reason I said I was frustrated is because that would have been an excellent point for me to sell covered calls, and then either before we close today or even just sitting in them and waiting out for this gap fill, I could buy to close the covered call position and have a net gain on the premium with that setup. So I'll be watching this. I think Tesla's going to need to get some more pullback and retracement going on before it can get more upside momentum going at this point, but we will see what happens since Tesla does what Tesla does. So definitely keep an eye on things in that range. Let's see here. Other tickers. We've got lots of crypto stocks that people are panicking on, so I'm going to look at a couple of those real quick before I go back to some of the more conventional things. So Riot, Mara, many others. These are all great examples of situations where you've got retracement going on, similar to what I'm saying I'd like to see for Tesla. Ultimately, we're still in very much a bullish setup on a lot of these. Plus, crypto is going to keep on ripping into next year. Y'all saw the chart for Bitcoin earlier. Very much still bullish. We haven't even got into all the hype of the altcoins, which is where a lot of retail traders really get going crazy. People were asking earlier today why things like MicroStrategy and Coinbase and Hood were ripping, even though stocks like Riot and Mara and some of the other Bitcoin miners were pulling back. That's, like I've said before, it's because ultimately they get their revenue from different places. So we've got lots of transactional volume, especially amongst the retail trading crowd. Stocks like Hood, Coinbase, those types of things are going to have a lot more movement going on. MicroStrategy, really a lot of their value is coming from the significant Bitcoin holdings that they have. So as MicroStrategy, or as Bitcoin continues to sort of hold that zone and push higher, MicroStrategy is going to continue upside momentum as well. Riot and Mara, from a mining standpoint, you have to really understand how mining works from a crypto standpoint. Many of you know I've been in crypto since 2017 as an investor, a trader, but also I mined crypto between 2017 and 2022. I still have some mining rigs. It's just they're not running at the moment because it's not necessarily profitable for me to mine some of those. What a lot of us Texans do is, as it gets cooler here, if we've got insulated garages, we turn our mining rigs on in the garage because it's basically a self-paying heater that mines crypto in the meantime. So I will set my rigs back up here pretty soon and mine some random altcoin because it's not profitable to mine a lot of the larger coins nowadays, and you don't mine Bitcoin with GPU miners. But at any rate, I share that because companies like Riot and Mara, they have very low cost per Bitcoin mined, which is what a company like this is evaluated on. So as they get into their following earnings and kind of into next year, as Bitcoin gains more traction and momentum, that's where you'll start to see a lot of the upside movement come with Mara and Riot. To show you an example aside from just this most recent breakout, if I look back at the weekly chart real quick, notice how Riot didn't get its massive movement. Like, it got a little bit of upside movement right here in the early or late 2020, 2021, which is where we started to see the first crypto push, and you see this push up in the start. So if I was to draw, the chart kind of like you're at the zoo or something and be like, you are here, you're kind of in the zone. And it's kind of funny because I'm also looking and we're literally kind of here right now. I'm not saying that Riot goes to whatever the hell it went to before, like, what's that? 79.50. I'm not saying that Riot goes over $75 again. I'm saying that as Bitcoin builds its momentum, as you get the traction, as the profitability of mining comes back into play, that's where you will see these larger moves come into play for the mining companies. So it's a patience game. I'll probably be adding to my long positions on this pullback here. Same thing is going to look very similar on Mara. Several of the others. So you can see here we pulled back. We're kind of the same consolidation area here, but same thing. Mara was more infancy at this point, I'd say, but you could see this first initial pop in August 2020 whenever we saw the initial movement, and then we kind of pulled back, consolidated, and then Mara went absolutely insane in the months to follow and ripped to that same range. So you can't get hung up on a direct correlation between Bitcoin price and these mining companies because it just doesn't work that way. But we'll be keeping an eye on this and actively trading it. These are good if you want crypto exposure without trading crypto itself, which I still can't wrap my head around why people don't want crypto exposure itself, because the safety and security aspects is the same regardless. But there's lots of cheaper stocks that are crypto related that you can get that exposure to without paying the really expensive prices that come with like Coinbase or MicroStrategy or some of the others nowadays. So another kind of crypto ticker just to kind of keep on your radar that was crypto ticker but also a mobile application was BKKT, and this was one of my favorites in the last go round. I'm really kind of frustrated with myself because I had planned on buying more shares of BKKT over the last couple of weeks, and I waited and waited and waited, and then news came out today that Trump's Truth Social is looking at acquiring this company for their mobile app and cryptocurrency processing and rewards program. And look at this freaking huge, massive green candle. That's a 162% increase today on BKKT. So that would have been really sweet to be sitting in shares. It does look like it's about to fill this gap right here that it left on the daily. And sorry, I don't have my levels chart here because back when I was trading this before, I was using just Webull for this. But you want to be careful here, especially if they do get bought out. I don't think that there's options available on BKKT because of the price range it was in previously. I would have to check that or they disabled them because of the news, but it got basically halted multiple times today off that news and the volatility halts. So massive movement, good example of when news or information starts to happen with these crypto tickers, things gets kind of crazy. So it's up even another 15% after hours is what it looks like right now. So that'll be interesting to see how that shakes out. Let's see, any other tickers? Yeah, Palantir, duh, and SoFi. Yes, good ask, Mac. Good ask. Absolutely want to look at these because Palantir, and sorry for all the words and whatnot on this chart. Maybe it's actually helpful. I don't know. I put some stuff on here to explain sort of what we're seeing and what's happening. I will delete a few of these lines that are minor support and resistance levels. What we have here is another bull flag. We attempted the bull flag breakout there. And if I look at it in the 4 hours, it's a little bit more clear. But bull flag, right? We attempted the breakout. We kind of rejected up a little bit higher, and now we're retracing. What I want to see is a hold of the support in this range around that 59 level, and then upside momentum and a push for a breakout. And that would be a good sign. You can see the volume is still there here. Honestly, we need a little bit of retracement. You can't look at a movement and a setup on Palantir or a stock like this as like, oh, we got a big push, and now I'm just going to sit and wait until we go all the way back to like this range, right? Because overall, the movement, there was still a bullish setup in play. The options flows by the whales and larger funds still showed very much bullish sentiment and bullish setup. So I stayed in my longer term swing calls for the most part, and I'm still in my shares as well. So I'll reevaluate if I see us lose this support, or if I see on the flows that some of those larger funds are closing out their bullish positions. I'll take that as my signal to minimally close out a portion of my position. So, like shares, I'll probably won't close them. I'll sell covered calls. My cost basis on my shares is like $17.11. So, I'm up significantly from that. I'll just sell covered calls to hedge my position. So, still very much bullish. I'll be looking for a move to the upside. What we really need to see is a push above that 65.77 level, which is the previous high. And we'll see if we can move up and make this measured move up towards that $88 mark. See SoFi, look at that, and we can look at Affirm and some of those others that are in the same realm. So SoFi, same thing. SoFi is an excellent example of many technical aspects, so we'll use this as kind of a training opportunity too. But SoFi had this gap up on the daily, which is what this little purple square rectangle thing is. And then you can see the gap fill level was right there, which we just happened to tap here perfectly before bouncing. So that's a good entry for calls, and I took that entry because our setup is still bullish intact. So technically this is a bull flag. If I draw it for you so that you can actually see it, you could draw it as a bullish pennant and draw it downward like this. I'm more conservative with this, so I'm going to draw it straight across. And this would be the bottom of your flag. And your flagpole, here's the part that's more subjective, right? I could say it's from this previous point right here, and that's a flagpole. I could say it's from here. Arguably, I could also say this is a bull flagpole. I'm going to go a little kind of in between with this setup, because if I look at the weekly chart, you can see that this was the low before going and forming a new high. So technically that's my most recent low of this current trend. So that's why I'm going to draw it there. And again, that's subjective. That's more of a conservative estimate that you see there on that one. And now your measured move is based off your flagpole height. So I'm not saying we go 47%, but that's a measured move of that. If you want to get more conservative with it, you could draw it based off of like a smaller pole, so 23%. But here's how I'm going to show you how I typically will mark my measured move, since we have upside levels of resistance from the historicals over here. I'm going to look at this and say, okay, my measured move for that bull flag was what, 27% short side, and then like 40 something percent otherwise. So I would be looking for a level of resistance somewhere in that range. So like 40% is just a random number I'm clicking. I could go over here and also look, if I change this to my weekly, I can see if there's a level of resistance kind of in that range that I don't have marked yet. You can kind of see that there was a rejection here where we reversed before more upside movement that also kind of served as a support level on that following candle. So I'm going to go ahead and I'm going to draw this here. And then if I look back, it's actually that same zone and range. It's kind of uniform across there. You can see that is kind of in the middle where it counted support there, so resistance there, turned to support, and that support broke. So I'm going to go ahead and mark that as a major level anyways, but I think we said, what, 40 something percent, so that's 43%. If you want to be conservative about it though, if you want to make you a point to actually sell or trim your position, you can see that there was a resistance level here that was also respected. If I want to be a bit more conservative, I could draw it there, or magnet mode back on so it'll actually catch it. If I want to be more conservative, I could say that that would be a good target to do, which it's 21-ish%, which is a bit more conservative with that shorter flagpole, but you get the idea. So measured move to the upside, that would be probably a near-term target that you can do if you get a confirmation of a breakout above that current bull flag. So again, watch for a breakout to the upside with that, with some volume. That would be a good sign. Affirm, we're going to look at that real quick. God, I love Affirm. So we entered calls on this, that we entered the $75 calls, I think it was. Where are they? $75 January 17th calls. And they're currently up 156%. So yet another example that you don't have to trade really expensive options to make big gains. Same thing here. We had the bull flag set up. We also had bullish continuation. This is actually a bullish megaphone as well. Now that I'm looking at this again, it's a similar setup to what we had on Palantir. I won't leave it, but I'll kind of draw this just so that you can actually see what I'm talking about. Oops, that did not do what I wanted it to do. So if I draw this, I'm going to make it big and thick so that you can actually see this pattern that I'm referring to. And if you are overwhelmed and confused and feel like, how did he look at that and figure that out without like having lines there, if you look at charts long enough, stuff starts to stand out. And don't feel like you can't do it, because I was a diamond-handed ape in AMC and GME in 2021, didn't know anything about technical analysis, and I learned it. And I'm not a super smart person. So anyone can do it. It's just having time and patience to actually learn how to identify things and want to learn it. So you can see here this is a bullish megaphone breakout. Technically, I've got like a breakdown on how you can do your measurements for that. I'm not going to do the measurement for the bullish megaphone breakout here yet. I'm going to leave it there momentarily just to kind of see that, because I think that that's a good technical setup to use for reference as well, and we can see how it formulates and plays out in the coming weeks. What I would go ahead and mark here is a good setup to watch. There was inverse head and shoulder setup, but also bull flag. The bull flag breakout that we're trying to play out at the moment was similar to that one that we looked at just a moment ago. So you could draw your line here if you really want to, but like I said, I like to be conservative. So let me turn off magnet mode. I'm going to put it up here at the previous high as my bull flag breakout and previous low if I really wanted to. But then if I look over at the weekly, these are massive green candles with increasing volume. So I feel like I need to go add to my firm position on that breakout. And for those that aren't familiar with the firm, check this out. This thing has got tons of upside potential here, especially if the Fed interest rate decision impacts things. But there's an inverse head and shoulders here technically as well. Show you. It's going to look funky. It's there, and technically it's correct, even though it looks weird, but we're going to draw it anyways just so we have it. So that's the inverse head and shoulders. It would probably represent or show better on the monthly chart, but you can see we're breaking out of both the neckline on that setup. What I'd like to look for with any of my setups is confluence of multiple types of patterns, and seeing breakout or setups like that play out across multiple time frames. So for instance, we just looked at the bull flag breakout over there. So not only do you have a bull flag breakout, you also have an inverse head and shoulders breakout. You have increasing buying volume coming into play, and we're coming off earnings as well that were pretty solid for a firm. So there's lots of positive going on here from a bullish momentum standpoint. So this is where I would ride out the position and maybe trim to cover my cost basis where it makes sense. But this thing could have a lot of upside boom going into next year if it can maintain the momentum. So we'll see how that shakes out. And sorry if the lines are overwhelming. It seems like a lot. If you kind of slow down, you digest it, and then you see more and more examples, it starts to make more sense. So again, also confluence, bull flag, inverse head and shoulders, and a bullish megaphone pattern all here going on with the firm. So lots of bullish setup going on. Let's see, maybe one or two more tickers, and then I'm gonna call it wraps. Let's see. What else did we enter? So, like, someone asked about this, because I'm not gonna lie, this was like the most random trade. I normally don't trade stuff like this, but I saw some options in the flow that stood out to me on one of my screeners. So I was like, you know what? Why not? So I bought some calls earlier today on this. I don't even know how to say that. Claris Therapeutics. We're gonna say ACRS, but I bought some $4 calls on this earlier today just for giggles after seeing it in the flow, which was interesting because I looked at that. I looked at the previous like range of movement that this thing has. I was like, all right, why not? Let's throw $200 at it. And those things were ripped like 120% earlier today. So that was interesting. It's a good example and shows you the power of the unusual Wells flows, but I'm kind of going to ride it out and see what happens. Because like I said, I don't normally trade this ticker. I don't know a whole lot about it. So we will see whether it works out in my favor or I get burned. The smart thing would have been sell half my position at 100% gains. That way I cover my costs. But I didn't. I decided just to let this one run. See what happens. Hood real quick. We're going to look at Hood. Because those calls hit a new high day too. And it's still bullish. So Hood. Morehead degened into some calls on the ACRS. I saw you were up 20% earlier today. So Hood has still got this bullish setup going on here. I think Hood's going to continue to see bullish momentum with retail traders. A lot of them buying crypto on. And sorry, there's a lot of minor support levels here. But a lot of retail traders are obviously trading on Robinhood still, regardless of how you feel about the stuff that went down in 2020 and 2021. Like, I personally was in AMC GME. I personally saw the buy button disappear, and I have no hard feelings. Like, it is what it is. And at the end of the day, regardless of how people feel about Robinhood, they still have one of the most simple and easy to use interfaces on a mobile phone app out of any other competitor, and that's coming from someone that literally has used pretty much all of them, including Webull and Thinkorswim and Fidelity and various others. Robinhood's app and UI is just so easy to use that it's kind of my go-to for my smaller accounts I'm trading on a mobile application standpoint. If I know I'm going to be out and about a lot, I'm probably going to be trading on either Robinhood or Webull, because any of the others are just a bit too clunky to actively trade on mobile apps. So coming from someone that just kind of likes to look at stuff from a non-biased standpoint, personally, Robinhood, I've got no salty feelings towards Robinhood over the whole GME AMC thing. But yeah, like, we're breaking out, more upside momentum going on there. It would have been nice to see that gap get filled before we push higher, but it is what it is. We'll see if we can maintain the momentum. You can see it rejected when it hit that resistance level. We'll see if it holds the rejection and moves lower tomorrow. It does have another gap here. It looks like that it has yet to fill. That's one thing to note as well. But if it can push above that resistance level, you're looking at 38, and then kind of clear skies above that as we push higher. So we'll see what happens. I know a lot of people buy crypto on Robinhood as well, just because they like the simplicity of it, even though you are paying more in fees by doing that. That's just going to be the nature of it. I think I covered most of the stocks that we've been talking through today. I did forego going through a lot of the bigger tech tickers and stuff. We can come back to those. I guess really quick, I can glance at QQQ and SPY for you, just so that you had those. I'm a big fan and believer that the indices are driven by the underlying stocks and make up their top weightings, and not the other way around. So regardless of what you're seeing these big tech ticker or these big indices do, like, ultimately it's going to come down to what the stocks behind the scenes are doing, especially NVDA is what drew like a lot of the movement this year. So you can see right now QQQ is trying to hold this uptrend. We'll see whether it holds this trend. It always is so interesting to me that you've got like QQQ over here literally riding on the edge of make or break moment of a trend like this, as we literally have NVIDIA earnings coming in like a day. So it's always interesting how that seemed to shape out. You can also see that we also rejected back below this previous high here. So that might be that there's too strong a supply zone there. So we'll see. There's many gaps to the downside on QQQ that never got filled, and many gaps that, actually not many, there's one gap to the upside. So QQQ can kind of go either direction here. I think that profit taking and stuff into the end of the year is going to be a thing, especially now that the election has played out the way it has. You're going to start hearing people talk about Santa Claus rally. I will just tell everyone to be cautious with that. While you will see buying momentum on certain stuff that people will claim the Santa Claus rally, you can't make an assumption, and you shouldn't be making trading decisions based on the hope that a Santa Claus rally makes everything go to the moon. I'm not saying it can't, but also, like, that's not a trading basis. That's gambling at that point. So, yeah, be watching that on QQQ. SPY, probably similar thing, but a little bit different since it's not so tech heavy. So, yeah, SPY actually has a good technical setup too. So SPY, you can see it rejected at this upper trend line of this current uptrend, and it's trying to hold the support here, which also is where that previous zone was as a supply zone that now has become a demand zone. It hasn't quite filled this gap here, so it might get a little bit more downside movement. But, I mean, I'm not actively trading SPY and QQQ a whole lot. I scalped some, puts earlier today on QQQ for some quick little like 33% gains, but I would be cautious here with the ETFs just because the premiums have gotten a bit out of whack, and where a lot of traders will get wrecked on the ETFs into next year is going to be buying long dated swing calls on stuff like this and then don't understand why their premiums are dropping even though SPY or QQQ are increasing. It's partially going to be because IV settles down some, but also it's going to be because of the row on those contracts. Each time the Fed cuts interest rates, it actually negatively impacts the premium. So be careful. Go on the long swing call option as we head into next year. While it worked out for a lot of people last year as we saw new highs and we maintained the Fed interest rates, that won't always be the case. So it might make sense to start trading a bit shorter term for ins and outs, as well as trading a bit more maybe shares or indirect stocks or tickers that will move with these indices. So, all right, I've talked through quite a few today. If there are more tickers y'all want me to take a look at tomorrow, let me know. I should have more time and availability this week around meetings and whatnot to kind of look and pull some charts together. I will work on putting together the shorter, like 3 to 10 minute videos over specific topics for y'all as well. And then we'll go from there. But hope everyone has a great evening. And if anything comes up, reach out. Thanks all.